In this video, I want to show you how I nearly lost my Airbnb business, how I ended up building Ruvio, and why getting clear numbers as a short-term rental operator matters much earlier than most people think. My name is Edward. I actively manage more than 40 short-term rental properties. I host over 10,000 guests per year. And over the last 2 years, I've also built 2 software platforms and 1 app around this industry. So I'm not talking about this as an outsider. I run properties myself, I deal with the day-to-day reality, and I learned this lesson the hard way. When you only have a few apartments, you can get away with intuition for a while. A unit looks busy, money comes in, and you tell yourself everything is probably fine. But at some point, for me it was around the 5th apartment, growth starts creating a completely different problem. You stop asking, am I getting bookings? And you start asking which apartments are actually performing well, which ones only look busy but don't leave enough margin. At first I tried to solve it with Excel. And to be fair, spreadsheets can work for a while. But the more apartments I had, the more painful it became. Comparing units properly was difficult. Shared costs were really hard to split. Many expenses had to be allocated manually. Some things needed complicated formulas just to get close to reality. And I did all of that. But then daily operations took over. Guest communication, cleaners, maintenance, constant small problems arose. Suddenly, the business itself became a full-time job, and I had less and less time to keep the financial side really clean. So eventually, I handed most of it off to the accountant. And the problem with that was simple. I was basically getting a profit overview once a year. Not monthly, not even quarterly, once a year. So in reality, I was running the business mostly by feeling. I thought it was fine. I thought the margins were okay. And then I found out that in my property management software, one important setting had been wrong. I thought I had 10% more net margin than I had in reality. 10%. Guess when I noticed it? In November, when my off-season started. In winter, my business runs at a loss, so with a single click, suddenly I had a lot less money than I thought. I reached a point where I simply didn't have enough cash to keep everything running properly. Salaries, rent, ongoing expenses, all of it still had to be paid, but the business was bringing in less than it was spending. My first step was to go to the bank and ask for a loan, but they rejected me. The company was too young and they didn't really understand how to evaluate a short-term rental business, so I had to look elsewhere. After speaking to a number of people, I eventually secured 2 private loans of 10,000 euro each. That was what kept me alive. And that was one of the moments where you realize very quickly that operationally things can look okay on the surface, while financially you are running far too blind. I got through it. I paid the money back within about a year, but after that I made a clear decision. I never wanted to run the business like that again. So I started looking for software, and I found plenty of accounting tools, QuickBooks, Xero, and others. Some of them are good tools in general. I have nothing against them, but they were not really built for short-term rentals. They were not built for the way our income comes in through channels like Airbnb and Booking.com. They were not built for property-by-property comparison. They were not built for statement imports, allocations, recurring housing costs, or the kind of clarity you actually need when you manage multiple units. So at some point, I stopped looking for the perfect tool and decided to build it myself. What began as my own need turned into a real software project. We've now been developing it for about 2 years, and today I have a team of 4 people working on it. And honestly, the biggest difference for me is not just that I now have more data. It's that I have finally usable clarity. Today I can upload an Airbnb statement, map it once, and then bring in my income with 1 click per month. We upload receipts, invoices and rental agreements, and the system reads them, recognizes them, and helps assigning them to the right listing. If a cost belongs to multiple properties, I can split it in a way that I want it. If a document is already digital, I can just upload it directly, and once all of that was in place, I finally got what I was missing for years. clean comparisons, real visibility, and better decisions. And that clarity has changed the way I operate. I decided not to renew 3 rental contracts because I could clearly see they were not worth keeping. For another listing, I thought I needed to invest heavily into renovations. But once I looked at the numbers, I realized the apartment was already performing well, so all the money was better spent elsewhere. Because once you grow beyond just a few units, guessing is dangerous. It can cost you your business. And that, to me, is the real point. Ruvio is just my way of tracking. Yours can be different. But you need to know your real profitability, not just a close guess of it. So that's the story of how I got into my worst business phase as a host. There is a lot more from what I learned in the last 5 years of hosting. And you can find it on this channel. So make sure to subscribe if you don't want to miss it. If you manage short-term rentals yourself, there's a good chance you'll run into the same problem sooner or later. So don't wait until you get bankrupt and reach out to me. I'm honestly glad to help you not making the same mistake. Give this video a like and write a comment if you feel my story.